Today, the market continues to climb higher with very impulsive bullish price action as we finish the second green consecutive quarter close in the stock market. Does this mean the bull market's back? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. So 3 days ago, I talked about, is this rocket ready to launch? And as you can tell from the last few days of price action, we are getting a very impulsive push to higher prices. So when you're building trade plans and you're planning for swing trades, or you're day trading and you're building a plan around following price action, there's a lot that goes into that. And if you think when you watch these videos that I'm just saying the market can either go up or down, that is very obvious, but there's a lot that goes into how you plan which direction the market is likely moving and how you manage risk. So if you need help learning how to trade this market, following price action, having great risk reward setups, I do suggest you consider joining the Stocks Channel Discord server. I give all of the objective reasoning on why I say which direction I think the market is going, and I always give you your risk levels so you know exactly how much risk you're taking for every trade you place. Following price action is the best way to trade this market because there is no bias in price, and price is giving you instant feedback each and every day, and there is nothing lagging about following price. It is instantly going to tell you where we're going from here. So if you're interested in the Stocks Channel Discord server, you can find out how to join by clicking on the link below. All right, so looking at SPY, we did close the gap to the upside at 408, and we did continue to push higher and close outside the upper Bollinger Band, and a lot of that was likely due to the short squeeze that we had today. This was the quarter close, and there were a lot of bears not expecting the SPY or the SPX to close at these levels, and they were having to hedge their short bets by buying lots of shares because they had naked calls that they had to make sure they were covered against. So when you get these short squeezes, there's always a good chance we see an instant reversal. So from here, there is a very good chance we need to come back down and cool down a little bit, especially because we're outside the upper Bollinger Band. Now we also have gaps to fill to the downside at 404, 401.6 and 396.5, and we did fill this gap to the upside. Now we also have a gap way up there at 421, but there's a good chance we need to do a little bit of backfilling and a little bit of cooling down before we go any higher. So yes, this was a very bullish week and a very bullish end to the quarter, and we have to start thinking about the possibility that the bear market could be over, and that is a totally different topic that I'll cover in a separate video. So if you're still doubting the possibility of a bull market, that is a completely separate issue. Price action is currently giving us a bullish breakout with a bull trend, especially now that we have SPY breaking out to another daily higher high above 404. So this is a bull trend gaining momentum, and as you can tell, all of these moving averages are positively sloping, including the 200 daily moving average. So this bull trend is only going to get stronger and stronger the longer SPY stays above 400 or the breakout level at 404. So use critical support levels at 404 and 400, and the critical resistance from here is going to be the zone between 412 and 414. Above 414, we're back above the 50% retracement of the bear market, which means we're likely going to push higher into the 420s and 430s. On the NASDAQ 100 triple Qs, we were up 1.66% today, and big tech continues to charge higher, pushing SPY with it. And as you can tell, we are very close to closing the gap at 322. Above the gap fill at 322, we do have the double bottom price target at 327 because we did get the double bottom off of 260 as long as we're above this neckline breakout at 294. This has been a long time coming for this price target because we did have a very long pullback in the month of February that went into the middle of March. But here we are now at the end of March at much higher prices, very obviously breaking that February high, and from here that is now going to be an important risk level for long traders right there at 312. So to the upside, we have a gap to fill at 322, and then the downside, we have a gap to fill at 313, which is also going to give us a retest of that breakout at 312. So don't rule out the possibility that we go fill that gap to the upside, pull back to close the gap and get the retest, and then go reach that double bottom price target at 327 at a later date, which would go hand in hand with the big tech rally running up into the earnings season, which is usually why you get such a bullish April. So I think there's a very good possibility we go up, down, and then up again and still have a very bullish month ahead, but there's obviously going to be plenty of volatility and you need to be prepared for that. You can see from the triple Qs, we have a very strong bull trend with all of these moving averages positively sloping and with nice separation, which tells us it's a very powerful trend. For that reason, we have very strong support at 312, 308, and 307, And as long as we can stay above that critical support zone, I do expect to see us pushing into the 320s and then the 330s. On the Dow Jones, we were up 1.26% today, and the Dow Jones is getting that bull breakout above all of the moving averages, and from there we are looking for a push to the higher target at 335. You can see this is a bull breakout ever since we broke above the resistance trend line, and then we got confirmation with the second day in a row, and now we're pushing back over the 50 EMA with a gap up and close near the high of the day. So look for critical resistance in the Dow at 335, and the critical downside support will be the gap fill at 329 and the support zone breakout at 327. On the Russell 2000 IWM ETF, we're up 1.84%, and the small caps are starting to bounce back over the 20 daily moving average, and we did clear that resistance zone between 177 and 178. From here, we could go close the gap at 181, which is going to be very critical resistance because we also have the 200 daily moving average there. If we get rejected from any of this resistance, we're likely pulling all the way back down towards 175 and then the gap fill at 172. On the ARKK ETF, we're up 4.83% today, and it does look like we're retesting this double top resistance, which could now be a triple top. And if we get rejected for the third time, we're very likely going to see a very sharp reversal to the gap fill below at 32. Now, if we get the bull breakout, then it's a higher high after a higher low, and then we're likely running towards 43. So for that reason, 40.5 is very critical resistance in the ARK ETF. Whether we get rejected or the breakout, only price will tell us. On the VIX, we were down 1.68% today, and the VIX continues to crush, and we're now closing down below 19. And as I continue to tell you, the VIX is showing different behavior this year because we're spending a lot of time below 20. VIX below 20 tells us there is not a lot of fear in this market, which is exactly what you see in a bull market. So the VIX spending all of this time below 20 is telling us we are getting different behavior than the bear market of last year. On Bitcoin, we're currently up 1.4%, and Bitcoin is trying to get a bull breakout above 28,000 to reach our next price target higher at 29,400. There's a good chance we get rejected from that and come back down towards support at 27,000. And if we break 27,000, look for support at 25,000. On Google stock, we were up 2.81% today, and Google is getting that bullish bounce right where we were expecting it, which was that support at 100. Keep in mind, Google was just cooling down because it went way too far, way too fast, and it needed time for that 20 daily moving average to catch up. And now you can see prices bouncing off of that level and starting to get the resistance level breakout yet again. So from here, look for Google to retest the highs right around 106, and then a breakout takes us to 110. Critical downside support remains 100 and that 20 daily moving average. On Amazon stock, we were up 1.26%, and Amazon is also getting a bullish breakout, and we have the full bull trend, so you're bullish in Amazon as long as it's above 102. Below 102, we look for the gap fill at 100, but above 102, we're looking for upside targets at 108 and 109. On Microsoft stock, we were up 1.5% today, and Microsoft finally closed the gap at 285.5, and we're clearing that and going above that to reach our next price target higher at 290. Above 290, we go to 296, and if we get rejected from 290, we'll be looking for that gap fill down here at 281. On Nvidia stock, we're up 1.44% today, and Nvidia got another bull breakout above the resistance at 274, which means we're likely going to the next price target higher at 282.5. Remember, this is all off of the bullish bounce off of support at 258, and the critical support level to pay attention to is now 267. On Tesla stock, we were up 6.24% today, and today we gapped up above that resistance at 197, which told us we were going to the next target higher, which was just below 208, and that is exactly where we went today. We need to break 208 now to get to our next target at 215, and then if we break 215, we're looking for 230. A rejection from 207 to 208 brings us back down towards support at 197. On Apple stock, we're up 1.56% today, and Apple also had a bull breakout closing above our resistance at 163, which means it could be well on its way towards the next target higher at 169 and the gap fill at 171. A rejection from here and a break down below 163 could take us down to fill the gaps at 161 and 158.5. On the financial sector, we were up 1.1%, and the financials are getting a bullish breakout above 32, but we're going to have resistance right here at the negatively sloping 20 daily moving average. So if we get rejected from that, you're looking for the gap fill below at 31.5. The industrial sector was up 1.32% today, getting that bull breakout above 100, and you can now stay bullish as long as we can hold this breakout zone between 99 and 100. The healthcare sector was up 1.07% today, coming right up to the resistance we were looking for between 129 and 130. We need to get the bull breakout to get a bull trend, otherwise we're still just making lower highs in a bear trend. The energy sector was up 0.69% today, getting a bull breakout above resistance at 82.6, and we still have this double bottom breakout look as long as we're above the neckline at 80.5. So jumping back over to the S&P 500, without a doubt, this was a very bullish close to the end of the quarter, and we are now going into the summer, which is very seasonally strong for the big tech sector, and we're starting to finally see a little bit of strength in the financials. We need to see an everything rally to keep this bull trend going, which means we need the small caps and the financial sector to join in on the rally. So know all of these critical risk levels and build a trade plan now, because right now you're getting a bullish breakout, and if you're going to keep a bear bias during a bull breakout and a bull trend, you are going to have a very miserable time. When you have a bull trend and you have bullish price action, you need to leave your bias at the door and you need to follow what the price and trend are telling you. If you want to join other price action traders and get access to all of my intraday updates and analysis, come join us over at the Stocks Channel Trading Discord community. You can find out how to join the Stocks Channel Discord by clicking on the link below. I also have my own trade alert service called Bank Trade Alerts that will send you all of your buy and sell alerts directly via email and text message, and only trades the ETFs TQQQ and SQQQ. You can find out how to join Bank by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.